The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi, folks. Basil Chapman here on this very first trading day of 2024, Tuesday, the 2nd of January. We're looking at the Dow. Down just 4 points at 37,682. Now, what's really interesting is that the technicals were all pretty good, except that the on-balance volume did a very nice reversal, and the MACD has actually turned down. But within that context, what we're looking at, because of the nature of the Dow 30 is no more the industrials. It's not even close to being the industrials. The XLI, is that correct? XLI, that's this S&P Select Industrial Spider Fund. That's much more an industrial sector fund. And even then, it's got quite a bit of a mix, but it's only down 16 cents at 113.83. But really what we're looking at is, and let's just go through this now. We'll start off with the Dow. Say that the Dow is down just a little. There's a huge single leg A to the upside. I really have to consider this as an A. I don't see any reason why I shouldn't. The stochastic still at 97% in the weekly chart. The MACD is very strong. The histogram, well, we've just started the week, so I can't tell. But the histogram is very, very strong. 9 is way over the 14. That's the 9 period. This is a differential of the MACD over the 26-period moving average. You've got the price way above the green 9-period moving average, which is at 36,504. You've got the black 14-period moving average at 35,943. To see these flip pink, negative, you'd have to see the Dow at about 34,800. I'm not saying it's impossible. I'm just saying at this particular point, the surprise, as I said on Thursday going into Friday, the surprise will be, what if we closed, and we didn't actually close very negatively on Friday. We did have an intraday pullback. We came back quite nicely to close only down 20 in the Dow. But what happens if over the weekend, when the futures open on Monday night, on the 1st, in preparation of the next day, the 2nd, the Tuesday, that's today, what if there's a sudden sell-off as people had waited and waited and waited for the 1st of the week, 1st of January, this first week, and then decided, okay, now we're going to take some profits. We can use them as longer-term profits into 2024. We'll start that process. We don't have to do all the selling, but look at the selling. I mean, you got Microsoft. Microsoft is down almost 8 points at 368. It hit a high today of 375.90, and it's now it's at 368.14, almost 8 points down. And remember the pattern. Patterns don't change. They stay in place. Just keep in mind that if you can identify a pattern, it just gives you a really good heads up as to what the possibilities are. Possibilities here were, now I have to switch over to this chart right here, that this pattern can go from, now let me move it over, there it is. They can go from a straight line down to an arch formation like that. But then if the left side low holds, it could make a second arch formation. So the lowercase h goes to a lowercase m. That's the big test, because if that takes out this left side low here, that's going to be very serious. In other words, if Microsoft this week, probably I'd have to say, even though it's a short week, this is the week. If it takes out, I don't know about closing just yet, but I'll first of all say if it takes out the low of 361, is it 362? Yes, 362.90. That was the low of the 4th of December, a month ago. Gone sideways in a rectangle formation. Lowercase h goes to lowercase m. If it closes sharply above the 370, this is the high right here, 377.64, that'll become a leg D. That'll be really positive. But if it takes out that left side low and goes under 362, it says, uh-oh, Microsoft is in this rotational correction where it was a great leader right up until the 29th of November. That's great. I should mention we are long from the 3. We're wrong from right there, 338. And now what we look at, we've got a trading position. We've had different ones. We've got another one right here. And we just got out of that today with a very nice profit. I'm not going to mess around. Why? We've got our core position. We're going to trade around it, try to build up a little kitty of profits as later in the year it starts to regain its momentum and starts to go to even higher highs. But at this point, consolidation. But look at this. You've got the SMHs. That's the semis. Semis leaders up, semis leaders down almost 5 points at 169.95. I should mention, I should have put this in. I'll put it in now. We can get stopped out, that's okay, but we are short the semiconductor index based on all the techniques that I use for the Chapman wave methodology. So let me just put that in. We're short via the long position of the SOXS. Now that could change. By the end of the day, everything could reverse, but I really think that the semiconductors at this particular point are extremely overbought. The SOXS, the 3 times short, is extremely oversold, and it just needs a bounce to relieve itself of this tremendous selling pressure that's in the SOXS and the buying pressure that's in the SMHs. And that, to me, is really part of this whole rotational correction that I'm looking at. Let's call it a high-level consolidation. Why? I don't see everything going to come tumbling down, just a very overbought stocks. And let's go back to our story. The S&P at this particular stage is down 27 at 47.41. After such a spectacular move, going from 41.03 to the high of 47.93, 66 something points. And now we're looking at this tiny little candle at its high right here on the, that was December the 28th. Yep, December the 28th as 47.93.30. I may as well just put that in. That's 12.28. After all that, to have the tiniest little doji candle as if to say, I'm really running out of upside energy. And that just says, there's not a major sell signal here. There was a little Chapman wave, very tiny Chapman wave Roman candle on Friday. And today we've pulled back. But the day is young. I'm just seeing some normal selling. Look at this. If you're looking at the chart after the spectacular move up, this is like an eye blink. This is nothing. I believe on a weekly basis that the 47.93.30 level this week might not be broached. So this will become a peak A, or whatever it's going to be, peak A in the weekly chart. Spectacular single leg A up to the, just 41.03 to 47.93. Stochastics flat at 96. The on-balance funds overbought. The MACD is very strong. 9 is over the 14. The price is way over the 9. QQQ, NDX 100, suffering the fate of the SMHs to a certain extent. Just normal selling, a little more intense than we've seen for a while. And there it is. Sharp move to the downside, down 6. I'll be back. Dow's down 21. Basil, Chapman, Tiger Technicians Hour.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so we want to know how important is a peak T, the fourth highest peak in the Chapman wave. Yes, you can go higher, but these other things can happen. So look here, the 1 minute chart at 8:30, the one at E-mini, this is the March, pulls back. Starts, it makes a cup formation with weaker technicals, then dives into the 9:05 area, time-wise, Eastern time. Then goes peak A, B, C, D. Where does it stall? 6 sessions that touch the 200-period moving average, and then it drops sharply from the 47.88 area down to where? It goes down to the 47, was it 73-ish? Then it raises up to where? The 200-period moving average, and then it stalls. So this is going to be important. 47.86 is the line to watch. That's the 200-period moving average repellent zone. Let's see if it becomes a magnet and then repellent at this point. If it becomes a propellant, if at any point this morning the E-mini goes to 47.88. And remember, look, here's this line that we typed in. I put it in, about a week or so ago. I said, this should become very important, this dashed line. Well, lo and behold, that was the exact low at 12:30 on the 29th for the rally, and it stopped dead at the 10-minute 200-period moving average at a peak E right there. It comes down sharply, and now it's bouncing. So this is the line 47.98. 47.98 is the one this morning. Does that coincide with this? This is 47.85. So a little difference there between the 1 minute and the 10-minute horizontal line that was really important for quite a while. Okay, let's get back to our story. So, the market is, none of us are really psychologists, but when you're in the market long enough, you know that it's almost like sport. All these golfers, all these top-rated tennis players, they could play any shot. They can play every shot. They can, at some point, there's nothing that they haven't done. It's putting the package together, and it's the mental game. And my assessment was, not being a psychologist, but I would say definitely a market psychologist, all of us try to be, my anticipation was that the downside would be a surprise. And if it did occur, it should occur really quickly early in January, almost the first couple of days. if that speed to the downside includes really important stocks like an Apple, look, here's an Apple, down $6, down 3.1%, right below. Remember, I drew this in. I said that's going to be the key area of support. I didn't want to make a big deal about it, but I said I think I've got a Chapman wave unconventional flat-based restart, which says we should go under 186 at some point, and here we are at 186.53. If you look at Amazon sharply lower, down almost 2%, down 2.98 at 148.99. Made the stop that I said, I believe it's a peak F. I'm going to give it an alternate count, but I really think everything about it suggests it's a peak F. I'm still going to call it a peak B, although it's a G, maybe a G in the weekly chart, but at least for now, it needs a consolidation, probably getting to the 145s, etc. And therefore, it would be the surprise of a sudden pullback. And then because of the speed, and so many people were not anticipating it because over the weekend, everyone, I mean, all the news reports and business reports were talking about 2024 record highs should be fantastic, blah, blah, blah. And now this comes as a surprise. So what happens psychologically? Let's just say on Friday we were about to take profits, but you said, I got to hold off. I got to hold off for early next week, and then we'll see what happens. Well, early next week comes, and in the first, we haven't even been trading an hour. You've got these key stocks, the Magnificent Seven, down big numbers. That just kind of says, whoa, what happened here? I didn't even get a chance. Now these people have to wait, fund managers, etc. They have to wait for a bounce. We've already had 2 bounces, and each time it's been met with selling. So to see the Dow go, now normally under other circumstances, we'd expect the Dow to close up today or tomorrow at the latest. This is a little different. This has to do with timing. It's the timing of the tax deferment that I always say, if you want to take profits, just take your profits. Forget about the tax implications. Unless it's something kind of complex, just, you can see, I remember way back, I can't remember the year, but here at TFNN in the den, I remember there were 2 or 3 people that said, I don't want to take profits right now. I think it was the beginning of December. It's been a fantastic year, and I've done well. I don't want to take it. I'm going to wait until January. And I remember saying, whoa, I've seen this before, where as you're waiting for January, the amount of tax that you would have paid is a pleasure to pay because the stock really took a dive in the interim period. And that's kind of what we might have seen if there was selling pressure going into the end of the year. Instead, there kept being buying pressure. And that says that this selling pressure right now has to be monitored very closely. So what I'd say to subscribers to my opening call is that I'm anticipating that there's a bit of a rally in the dollar. Dollar's up a little bit. It's up 75 ticks at 102.09. Not bad. One of the better days it's had. On the upside, it's had a lot of exactly the same thing, but on the reverse with the red candle instead of a green candle. It's important. And it did get to very close to the 200-period moving average in the weekly chart. The same thing I said, the TBT is a much better clue to me than the TLT. So the TBT is the ultra-short Lehman 20-year Treasury bond ETF. I said, I suspect that this is really the yield, and the yield is going to go a little bit higher. I don't know if this is the big change and now yields are going to go. I just think that this is a nice counter-trend bounce that comes exactly with the timing, the psychological timing of seeing some selling in the market, certain sectors of the market, a sector rotational correction. And at the same time, you've got a good excuse. You've got the dollar rallying, you've got yields going up, the TLT going down at a peak, GSAS-C in the weekly chart. And that I don't even know if we can get to 96.58. That's the, is that a 6? Yeah, 6.58 in the, I've got to check that out. It's a little faint. Yeah, 96.58 in the daily chart, the 200-period moving average. But that's kind of the area that I would think it's headed towards. And it'll be the surprise factor that there's no chance to, if you're waiting for the market to open, the futures already dropped sharply. But it is how rallies, 2 things I couldn't do. One is I couldn't say How long this would last, in the back of my mind, I always have numbers, but out in the forefront, I can't say it because we hadn't even turned down. So that was just more than I would anticipate in terms of having projections. I do have projections because why? In the Dow, I have all these moving averages, and I have the rectangle that I said I think we're going to trade into this rectangle the first week or so of January, and that takes you to a low in the Dow of 37,073. So those are the clues. But the SMHs, that was the one that I said, the way they're acting, the way this pattern, this H pattern, not quite a dreaded H because it made a higher high, but the pattern we know so well in the rectangle formation, said to me there's a chance that we could test the low of 160.69 in the SMHs. That was made 2 weeks ago.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, so a question came in. Basil, is this the same kind of reversal that you had the exact high August 1st in the Dow? And the answer is no, it's not the same. It could turn out eventually to be the same. I need a full week of lower highs and lower lows before I could say that. And here's the reason. Look, let me first of all go back to the SMHs, the semiconductors. Look how beautiful. I had said that the 9-period moving average over the 14, this is the daily chart of the SMHs, semiconductor ETF, it seemed to me that we were matching many of the turnarounds before, but to get that strong 9-period exponential moving average, actually, this is the on the right is the one with the 9-14-period moving averages. To get that to turn down and then to go pink, there's so much work that needs to be done. It has to go probably underneath, quite a bit underneath that low, the low of 169.01 that was made on the 20th of January, probably deep into this candle here. Why? Because it takes a while from the high that's made. Remember, let me just do this for a moment here. Here's the Dow, August the 1st. That was a top, the exact top. And if you look, I think I've got it here. Yep, I do. And if you look at this August the 1st right here, look, that got right there. That was the exact top of the doji candle right there. So now keep your eye on this on the left. Keep your eye on the one on the right. The one is using on balance volume. The other is using the 9-14 period moving averages. Keep an eye on that. And let's just go to the SMHs. And you will see that the August, right here, that August high right there was also at the exact top. You got the exact bottom. You missed the exact bottom by a bar, and a bar is actually a lot of points. So this is what I'm saying. You got to know how to use all of these different techniques. That's why I've had those webinars. And then look at this right there. So the reason why on Friday, why we went short was because I had a reading here which was very similar to the one that was made back on the 20th of November with the on-balance volume turning down. And look at this. You've got a long way to go before that 9-period moving average goes pink and goes underneath. So it's a work in progress. So the answer is at the high that was made August the 1st in the Dow, look how long it took before it actually crossed negative. It took right up until the 16th of August, right? So I'm suggesting to you that if, and I don't know yet, if this is going to be a more concerted downside effort, and I have to tell you, the strength of the 914 is even greater than it was over there in August. So that means that I have to consider this is a work in progress. The timing itself, thank goodness we've got these tools for subscribers to opening call that we're able to at least try to get the exact ictus of the high or the lows. Look how this one worked right here for the October the 28th low right here. This is the Dow at the exact low. There are no, you can try, I'll throw out a challenge. Send me any information, any technique, anything. You can use algorithms, you can use whatever you want. A technique that every once in a while, and in this particular instance, it's more than once in a while, gets the exact low or high of a particular move to at least put you into the position so that you can put a tight stop and see what happens. Because that's all you can do. You don't know right here, this is the low, right? But you don't know either that this is the high. You've got the tiniest, after such a big move, you're up at 37,000 and you have a virtual 0% change and a tiniest doji candle made with it. And the next candle on the 29th is a Chapman wave silent doji candle. That's just a real good clue to say, if we're vulnerable, this is exactly the moment. Now, we could end up going sideways. So this is what I want you to show you here, because you always have to say, what if I'm wrong? Well, in this particular instance for the Dow, we're only down 35 points. And all we're doing is we're holding the 9-period exponential moving average. And that's why I say it's a work in progress. The stochastic's at 95%. To get that, to go down to, say, under 80% to the 78% level, wow, you're going to have to see at least another 500 points to the downside, and we haven't even got 34. We've got 34 points right now. So it's a work in progress. That's really what I'm saying. And you need these technical tools if you're going to use timing as part of what you do. And I like to think that we use timing because that's really an essential ingredient in the Chapman wave methodology. So now let's go to the QQQ. Sharp move down, still ugly. It's down 7.43 at 402. We've gone under. We haven't closed under because the day is young. Underneath the low of 401, was it 402.68? That was on the 20th. We're at 402.14, so it's a work in progress. Look at that tiny doji candle. So this just says to me, wow, if ever we're about to, and that's the thing about the psychology, the surprise of the pullback today, and the fact that if you just say the Dow's down 38 points, not a bad day. Wait a minute, that's not the whole story. The whole story is, yeah, the Qs are down 1.82%. The SMHs are down 3.18%. Haven't seen that for a little while. We had that Wednesday. You remember that Wednesday we were short via we were long the SOXS, and we had that one day smash to the downside, almost 500 points in the Dow. SMHs had a huge tumble. And then within seconds, the next day, whoops, started moving up to new all-time highs. So as it stands right now, this is a work in progress. All right, and because of it, I want you to show you the TLT down 61 cents. Not a big deal, holding the 14-period moving average, but it does say that yields are, in fact, running a little bit. So it gives the market the technical excuse to say, oh, yeah, the dollar was up, bond yields were up. So, yeah, you can expect some profit taking. And this is what they're going to talk about today in the market. They're going to say some profit taking. I think that we're looking at a little bit more than profit taking when you see the Magnificent Seven down so sharply. It says there's a rotation going on, and that's why the IWM holding, now it's down 88 cents at 199.83. Trying to hold better is going to be very important, and that's what we'll be watching. Is there some kind of rotation that says, aha, the laggards are going to become the winners? Let's look at ARKK. ARKK, this is Kathy Wood. It's her ARK Innovation. She got a lot of good press over the last week because that ETF ran up beautifully from 33, most recently in October, to the 54s or 53, so 20 points. It's a huge move up percentage-wise. Of course, I'm not going to even talk about 125 down to the 20s. That's something else. But this is just saying to me, let's watch and see if this is a rotation that gives you huge clues that certain sectors are really beginning to benefit. So far, we haven't been seeing. I'll be back. That's good.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So the rallies so far keep coming back to the support level. The support level is at 47.74. The low of 10 minutes to 10 this morning Eastern time. And now the Dow's up 1. And this is really fascinating because it's the mix of the Dow at this particular point that is really benefiting it. It's almost like it's a well-balanced portfolio itself. So you can understand why it's holding. We do have a short position in a very short-term trading position in the Dow. But that doesn't change our longer-term longs, not even touching those. But yeah, just on a short-term basis. Most importantly, the rotation said that if anything's going to be weak, it's going to be XLK, the S&P Select Spider Tech Fund, SMHs, that's Semiconductor Index, the ETF, and the QQQs. And that's what we've seen. And that says if there is a rotation like this, then we might even find that within a couple of days, maybe even by the end of the day or tomorrow, some kind of buying comes in because the buying pressure has been very intense. So unless the selling pressure says that the Dow starts to tank, I really mean tank down 335 points or more, meaning that the S&P down 34 right now really goes down 58 to 62 points by tomorrow. This just could be a very short-term profit-taking thing, and that's the reason why I say to subscribers, we've got to treat this with respect. We have also taken off about 9% on the very short-term pop that we got from the one index that's a short. Just got to take some money off. We got a small position of an aggressive long. And therefore, we have to treat it with respect, and that's all I can do. Now, I wanted to do this right here to show you something very interesting. The VIX index, remember just recently we saw the VIX index spiral higher. It was at 1181 on the 12th of December, and then it suddenly had a pop a few days later, and it went all the way into the 1314 area. And what I said is, when you're going to all-time highs, and then you have a sudden, in different indices, and then you have a sudden sharp decline, I want to see disbelief in the VIX index. I want you to say, I don't believe this. I don't want to see it move up 11%, 12% in an hour, just over an hour. That to me is just way too quick. That just says, oh, no. The fear factor came in it's too aggressive. And that just says to me, it's a work in progress. Don't think that this is the end of the world right now. I wouldn't do that. In fact, we are looking for sell-offs to add to long positions, treating this more as I wouldn't call it a one-off because I think it is rotation, and I think it's going to last a little longer in some of the sectors, maybe like the SMHs. Remember, wherever the SMHs go, the general market tends to follow that direction. So I'm watching this closely. I think the VIX index just got a little bit spiked too much, too quickly. And that just says to me, ooh, be a little careful here because buying could come in at any moment. All right. So with that said, what was the question here? Where was it? China. Oh, FXI. Yeah, the FXI. It's good to put this into perspective. FXI is down sharply, down 75 cents at 23.29, down 3%. But as I said last week, I'd be really careful. It looks to me like it's making lower lows and lower highs, and that there will be a bounce. I just don't see it yet. I think a little more work has to be done. So that's the FXI, the iShares China Large Cap ETF. Question came in. Where did it go? Oh, no. I put it somewhere. Oh, yes. Cisco. Cisco, which had this huge gap. Now, I spent a little time over the weekend looking at some stocks that had huge gaps because I have a way of analyzing this that the chart itself tells me what's going on. I don't know anything. I don't even have to know what the company is. In this case, it's Cisco Systems, 5G and cybersecurity, subscription transactions, all sorts of things like that. Has this unbelievable gap down. Toodle. It's trading the 53.80. What was it? 53.43 level on the 15th of November. And you go to sleep and you wake up the next morning and Cisco has gone down to 46.20. It's trading at 47.41 a little later on. It closes at the high of the 48.06. And then the following session, it goes above the previous high of the Chapman wave Roman candle high, the gap down high, works its way sideways, pops again, so it's going to peak A, B, C, D, E, F, G, or an alternate count. And here it is up 29 cents at 50.81. So let's go one step at a time. First of all, it says that this huge gap was an aberrational moment. It whatever the news was, it was so pervasive that maybe it was earnings news. I don't remember what it was, but whatever it was, it gapped down, went to a lower low, closed almost at the high, and since then it's gone from the 46s to 50.79, where it is today, up 28 cents. What does it tell me? It says that whatever the occurrence was here, it spent a lot of time saying that was an aberration. That was just an overstepping of whatever it was, an estimation of the negativity. It's not nearly as bad. But I like to see when gaps are filled. This is a huge gap. I mean, this is a big one. You've got the 200-period moving average of 51.02 to contend with. That's going to stall the price. So let's talk about January, all right? In January, I'm going to give it the whole month of January. If at any point, I don't care whether it's just a pop to the upside or a close, if it goes 1 penny above this doji candle high of the 15th, it can go to 53.44, 1 penny above that high. That will say that everything you're looking at in Cisco that was considered negative it wasn't even an hour, it was overnight. So the actual trading itself was just intraday. So it was a split second from the opening, and then a whole bunch of other things happened. It says that Cisco, in fact, is holding really well. And, I forgot, is that a buy? I would hold off on a buy. But I tell you what I would do. Because of today's action, up 25 cents at 50.77, now the Dow's up 26, and the S&P still down 35, I'm going to do something, and I just need the break in which to convince myself that that's the best way to go through this. So Cisco trading at 50.78 right now. We'll be back. We'll be discussing, is Cisco a buy, and if so, what kind of a buy is it? I'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors. Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So just before we wrap up, and you're going to go to Steve Rhodes, should be great programming today with all these different hosts. I mean, nice perspectives you're going to get. You started off with Tommy this morning at the Market Kickoff, Morning Market Kickoff, Tommy O'Brien Jr., really fascinating look at different aspects of the market. So in the meantime, the Dow's up 7, the S&P is down 35. So my just to sum up, I would start Cisco only if you've done your homework and you really like it. I would nibble right here. I'd start it's like a feeler position at 50.77, but the real issue is how does it hold 49.80? That area, 49.8, just $1 lower, so you can even have a stop of $1. But just let's look at it again in a few days' time. I like the fact that it's going against the grain. So just to sum up, where are we? Instead of long-term core positions, but we've taken profits on the short-term trading position of our core holdings in Microsoft just to take something off. That's the greatest area of weakness, magnificent 7th area. But we are shorted now just on a trading position, a small short, and we are short the semiconductors, which so far has worked out well. Have a wonderful day.